All right, welcome back for the episode of Carnivore Trades. Today is Thursday, October 19th, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here today. So, markets here taking a hit after the Powell comments. Look at the volatility here. Absolutely all over the map. And this market is at the lows of the day right now. So I talked about this over the last week or so, kind of like on Monday. I said I don't really like this gap. I don't think it's particularly healthy. And if we do come down here, we could be looking at that 425 handle. And I definitely think that's possible to be in play at this point. Markets are coming in. I also, said yesterday as well, you definitely can't rule out some type of a squeeze here. The market is getting very put heavy. So, if sellers get off sides, we could push up here. But right now, we are pretty close to that 425 handle. I would think it probably gets tested. And another thesis I've talked about, I haven't brought it up recently because we haven't really been doing much. But again, you could have a 1, 2, 3, right? 4, and then your fifth wave. Could we take out those lows? It's certainly possible, right? Right now, TLT can't get out of its own way. And that's really the bottom line. Heavy volume here. I don't know if you're seeing capitulation. It's getting pretty close, I would assume. Looking at like the ZB here, 30-year bond. Got a pretty good divergence there, and it's also working up on the weekly too. So maybe seeing some seller exhaustion. We did have Powell speaking again today. And, he did kind of what I expected, but it seems the market here just doesn't really, it is, that 30-year is still taking a beating. However, I will say, those yield curves are starting to normalize, and it's coming from both ends. So if we look here at the short end, you can see the 2-year coming back in. Take a look at the spreads. Now just 18 basis points inverted. That's the least we've been inverted since, I think, September of last year. So that could be seen as a positive. Right now, the 30-year is just running away. But at some point, this could be seen as a positive. However, there's kind of a flip side. This is also tends to be a sell the news as well. Typically, if you look historically, when that yield curve uninverts, that's kind of when the recession's getting closer or beginning to start. So that's something to consider. But in the short term, the market might like that. There's a 3-month 10-year only inverted by 50 basis points. But right now, that long end is still just wreaking havoc. So there's the 30-year above 5% now. This probably wants 5.25. It might not get there in a straight line, but and then you can see the 10-year here coming in onto that 5% area. Where we could be at a point here, where something's going to break. I just tweeted chart of JNK here. This is basically, we're almost at 52. We're about to be at 52-week lows right now. So we only have, another 30 cents to go. And that's almost below the October. Well, not really almost, but it's close to that October low. Something's breaking, right? This is not good. It's not healthy. The caveat, look at VNQ, right? So we're back below that trend line on the weekly. XHB. So housing may be finally starting to crack here. Look at that. So lose right through that 200 moving average. I talked about this. I said, don't buy that 200 MA. It's minor because you're bear flagging above it. But right now, here's the positive for the long bond. If stuff starts to break, that might be what it needs to get going, and you get a true risk off. XLU is still holding up relative to SPY here. XLP somewhat as well. So those can be kind of traditional risk off signals. Something to keep an eye on. That yield curve is starting to normalize, and it does feel like we're getting close to something here. Again, that JNK is definitely telling me something, and the VNQ is telling me something as well here. So right now, spiders down 83 basis points, and we are basically at the lows of the day. They could, maybe we get some short covering into the close. There's some gamma around 42.75 and 42.50. I don't think we get to 42.50 today, but if we do rally up, I'd expect it to probably be 428.50. I told my members this morning, watch for 427. If we break this range, we got a micro bounce there, and it's continuing to push through that. So again, I told you guys 425. That's kind of the ultimate level. I never really liked this. I said it as soon as it happened. I said we never built supports here, and that's the only thing I don't like about these rallies. But again, spiders taking a hit. We'll see if they try to save it into the bell. Triple Qs here again, down 86 basis points, back below that 20 moving average, 50 and 100. There is support here at 360. So if we look at an hourly or even a 4 hour, you can see this is kind of where we broke out from. I believe there's a fib here as well. Yep, so you're right into a 618. So we'll see if the Qs can get a bounce here and maybe find some support. So right in that 360 end. If you lose that, then it's probably down into this 352, 353 area and testing this lower trend line here. So again, those are the levels I'm watching right now. IWM, there it goes, right? So I talked about this a lot lately. Look, 165, it probably needs to get hit. And I think it's going to go there. So we're breaking through that wedge. Maybe they could rally it back up tomorrow and save it. But again, a lot of those, dealer buybacks are going to stop at 9 or the 10 a.m. OPEX tomorrow. So on the SPX anyway. So we're going to lose that kind of zombie bid. It is OPEX still, so anything can happen. And by the way, it's very rare to see this type of volatility during an OPEX week. Not so much the whipsaw, but the directional move. But in any case, IWM through that level, it probably wants that 165 handle. DIA here, via the diamond, again, got above that 200, never confirmed it with a secondary close here. Above that high, back below it, slight lower low on the daily. And again, 330.150 is going to be a good level of support for the diamond. They have some short-term hourly support around 332.50, but that's it for right now. And the Dow coming in, I think UNH took a hit as well. Yeah, that came back down. Yeah, that broke that earnings gap there. So that might want the gap fill or maybe even 520, which obviously would drag the industrials down as that is the biggest component. Semiconductors here down 68 basis points, and that's despite good earnings out of TSM. That's actually holding up still, up 4% on the day. Broadcom on the weaker side down 2%. NVIDIA, green to red day. Tomorrow, watch this. So this is in play. I've talked about this, a couple of times lately. I don't like that everybody's talking about it because they tend to fail. It's head and shoulders patterns, especially on big name stocks like NVIDIA. But if you get a weekly close below that, it's going to be pretty powerful, I would assume. So watch that. That could take you all the way down into the 325 area potentially. But again, hasn't triggered yet. We'll watch that into tomorrow. But SMH here, down $1. And trying to hold this little green bar low. If that goes, I mean, the 200 moving average is definitely in play. And then you guys know, I think ultimately at some point it's going to 129. IGV starting to roll over as well. This is still a strong sector here, down 0.5% on the day. But, pattern wise, if I had to pick something to be long here, I'd probably pick IGV. Now, maybe it could be a laggard bear. I mean, God forbid. But pattern wise, this is still pretty strong. And this is not a terrible little wedge there. And, you're above that trend line. You're above the 20-week moving average, which is more than you can say for the triple Qs. By the way, bearish inside bar on the weekly of the Qs and the spiders there. But IGV trying to hold up here down 0.5%. It's just getting hit with everything else. And, hey, it's above those moving averages, so need to respect that. Look at the Dow transports. Absolute bloodbath. This is going to 14K. We've talked about this a lot. You lose this pivot, that's where it's going to want to go. Doesn't mean it won't get a bounce here and there. But ultimately, I think it needs to go test that level. There's your trend line. If we look on the weekly, you can see this. We had this big down move, a big bear pattern, and it failed. So that's where the institutions, that's where they broke it out. That's where we'd expect it to go retest. So maybe a Pierce of 14. Yeah, pretty rough day here for the market across the board. All right, interest rates, we talked a little bit about already, but the 2-year, again, pattern-wise, this is still fine, but it is backing off. And again, that's contributing to the tightening of the spread, which, again, I know it's confusing, but it can be a positive for stocks. But bonds are complicated. It could also be a huge negative if it uninverts too quickly. That could be a sign that recession is here. And we had jobless claims this morning, and it gave no indication of recession. But the bond market is starting to say that things are normalizing here. It's coming more from the long end, right? So that just kind of cements inflation expectations. So it's a little bit of a tricky dynamic there, but either way, we're seeing that happen here, and the trend is up on yields. I will say the long end, though, if there is a true risk-off play, the long end could come in pretty sharply. And there was a lot of shorts in that long end too. Anyways, XHB, again, this has got to go to 70, maybe even a little bit below that, maybe 69. So there's that pivot right there. We sliced right through that 200 MA. You got a little support here at the 50 week, but right in this area, 70, 69, you can see that's where we went up. We came here, consolidated, pulled back, and then powered up. So that's where we'd expect there to be some support for XHB, but again, pretty good hit. And again, told you to hopefully everybody avoided that 200 moving average. And that's the difference between major and minor support. So big deal. You come down there, that's basically a hit, right? That's basically a tag. And then you come with a lower high, bearish inside bar, 1, 2, 3, and then right down. So XHB weak. VNQ we talked about. I mean, what can you say? The bottom's basically falling out of it. Could they save it tomorrow? The PPT come in and save it with a weekly power up, across the board. It's certainly possible, but you're below that 200-month moving average right now. And certainly not a good sign there. Financials, XLF here down 1 1/4. Again, trend line held, convergence of those moving averages held, and we're heading lower. So again, we never satisfied that 32 price target, $32 level there. So that may get hit. There's also some support at 31.50, and we'll watch those levels there. Look at KRE here, down 1% on the day. That's got to hold this pivot, otherwise there's trouble in the market. Same thing with KBE, and then KBWB, large bank ETF. Again, you can clearly see this big weekly channel there. Not good. All right, over to crude here and commodities. Crude up 2.3% on the day. That's still holding up. I still have this kind of maxed out around 90. Now there is geopolitical stuff going on, so there's always a chance it could, exceed that, but I don't see it getting much through that right now. But crude up $2 on the day, and we'll see. Tomorrow's 89.59 is going to be that red bar high. So watch that into tomorrow, but really the big weekly level is 91.88. So if you get a weekly close above that, I'll change my tune on crude. But until then, it's still just kind of stuck in this range, and I don't have it advancing all that much right now. XLE is actually flat on the day. So again, energy still holding up. Again, makes sense with crude. This is one sector that has kind of been immune to the recent volatility. Didn't quite make a higher high yet. And short term, it's a little stretched. I wouldn't look to own it. If you do own it, trail your stop on it. It still has some resistance up here. And that's really all I can say. Not a terrible pattern, though. The trend is up. So we'll give it that right now. Energy is a strong sector. XOP backing off a little bit, but just down 27 cents in a very, in a very red tape overall. So nothing terrible there. And then OIH also holding trend as well. Again, these are just doing some backing and filling here. And again, energy's hanging in there really well. All right, CCJ here, continuing to push up. I still think, again, based on the weekly, this is just needs to put in consolidation. But it's getting a nice bid here. Again, energy across the board doing well. URNM up 3%, and just in a backing and filling pattern. Nat gas here pulling in. We did have inventories today. Looking for this right around 290, but it is below that 20-period moving average there on the continuous. But still a lot of support in this range. We'll see how that trades into the end of the week. On the weekly here, we're inside of that green bar still. So as long as that holds, I would assume nat gas is fine here. All right, dollar index. Now, believe it or not, the dollar is not even up that much, actually red on the day. So again, maybe this is part of the yield curve normalizing and saying, okay, I don't care what the inflation expectations are. We think there's going to be a slowdown, meaning the market thinks there's going to be a slowdown. So yield curves coming in, dollar red, certainly a possibility. That said, the pattern is still fine on the DXY, and if that consolidates, it can go higher. It's really that simple. There is, it is into some resistance here, but if you go sideways enough, it can push up. So just be aware of that. Also, if TLT gets a really big risk-off bid, the dollar could also push up as well. All right, gold, again, gold green, yields green, dollar red. So let's take a look here. So right around 2,000 is going to be a resistance there. There's also a 7.5 fib. So that's probably the level it's going to want to get into. I mean, you're into the 618 now, nothing to say it won't pull back tomorrow. But that's going to be kind of your big level, 2,000, maybe even 2020. So there's that pivot high right there. But again, gold having a big day, and again, it's acting well. So lots of geopolitical fears. It's risk off, and I wouldn't expect gold to not get a bid here. But those are the levels I'm watching. It is a little short-term stretch. If you get some type of relief or fear subside, this will come in. So just be aware of that. Please don't chase it up here. But if you own it, trail your stop. Same thing with silver, although silver, silver was all over the map today. It was red and actually just poked back up green in the last hour or so. So silver continuing to get a little bit of a bid here. That is up 0.5% on the day. Still has some resistance here at 2350 though, but I think if you put in a nice pattern, this can go through that. I still like silver, and I still own it right now. Platinum here up 62 bips. Won't make too much out of that. I'm still waiting for one more drop in that. Same thing with palladium. I still think that needs to get through 1100. And then copper here on the weaker side, just kind of consolidating above this pivot. I don't like that. I think it's going to 340, as you guys know. All right, Bitcoin here. So Bitcoin's hanging in there. Nothing really problematic, and this is getting a bid. Maybe this is trying to act like risk off, and we've talked about this before. Bitcoin continues to have an identity crisis of, sometimes it acts risk off, and then sometimes it acts risk on, like leveraged NASDAQ. But when we had the banking crisis, it was like acting like a risk off. Maybe that's going on right now. It's holding up, but again, it's very strange that the fake news comes out and then it holds the bid anyway. But again, if you put in a sideways pattern here, nothing to say it doesn't advance back to 30K. But again, Bitcoin just kind of in no man's land, and it's holding the gains, and we'll see what kind of pattern forms here. All right, lastly here, market's closing about 30 minutes here. So we're just kind of sideways. So they might just pin us right around 42.75, which is kind of where we are right now. VIX coming in a little bit. We'll see what kind of pattern we get going into tomorrow. Maybe they hold this trend line here. They are trying to hold that little pivot low from the other day. I wouldn't rule out, though. This is kind of giving me that kind of June of last year vibe, where we had that move up, a bull flag below the 50 MA. And same kind of thing here. And that ended with kind of almost the lows of the year. Maybe that's what it's going to take to finally wash this thing out, and maybe that's how we get down to that 1, 2, 3, 4, 5 wave. But we'll see if the bulls show up tomorrow. I think we probably should have to test 42.60, aka 425 on the spiders. But again, pretty good hit for the markets here today, and yield curves are starting to uninvert. Market's trying to digest that all at once, but this is my support level. And just be careful. They could squeeze this up just as easily as they took it down. So this is not the environment to be a cowboy. And I've been telling my traders, especially if you're day traders, just be in scalp mode. Don't try to directional play too much, because you can see what happens here. Lots of whipsaw. Don't stay in these moves for too long. And the market will tell us when it's ready to get out of this range. I think it'll be pretty obvious when it happens. So anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.